Hello and welcome back to a weekly market recap. I'm with Rich
Hello, everyone.
and I'm Knight. Let's get to it. This past week, we saw the market fall again, down 0.57%. We're still up year to date in S&P 500, 18.01%. This week, one of the weeks that we've been looking forward to for a while with big market catalysts. And what we saw was CPI data come out on Tuesday, actually better than what we were expecting, came in under expectations, but there's some back and forth as to whether or not that's good news or bad news, which we'll get into in a second. The other big update were the infrastructure plan and where we stand on the hard and the soft infrastructure plan and how we're going to move forward on that. Now, that data came out on Monday and the CPI data came out on Tuesday. And rest of the week trading really was shaped by those two big days. So let's jump into how we performed this past week. Now, what we see is we actually start off the week shooting up. We opened up higher and then followed the same pattern of selling off throughout the day. We got a big jump up when that CPI data, what I was talking about, came in lower than expected. The market loved that. And then again, we started to sell off throughout the day. On Wednesday, we see this was a slower rise up, and then right into the open of the next day, we sold off significantly. And then Thursday ran up for most of the close, and then Friday, we just saw a big sell-off. Now, one thing to note about this Friday, there's 4 times during the year which there's this quadruple witching day, and it has to do with a lot of options contracts all expiring on the same day, hour. And what happens is we normally see on those days more volatility and usually more downside volatility. So you combine the news catalyst that we got earlier in the week with the quadruple witching day, and we had a lower week in the market. Rich, you want to give a quick update as to where the Senate and Congress as a whole stands on the hard and the soft infrastructure plans?
Yes, I do. And this week it was much ado about nothing, as in nothing has really been accomplished. Senator Manchin of West Virginia came out, and he's sort of the power player in all of this because the Democrats need his vote, and he's up for re-election in 2022 in West Virginia, which is a very conservative state. And he said that he'd like the $3.5 trillion social infrastructure bill to come in more like $2 trillion. And currently the negotiations on the corporate income tax, which everybody's expecting to go up, is negotiated right now around 26.5%, which was higher than the market was predicting. They thought it would come in between 24 and 25%. So that was a negative for the market. The rest of it is still moving along. There's some questions about Republicans in the House trying to stonewall and slow everything because they were expecting the $1.5 trillion hard infrastructure bill to have already been brought forward, and it hasn't.
Yeah, there's been some frustration around the agreement that was made by Nancy Pelosi saying, look, we're going to vote on the hard infrastructure package in September. And now that's being delayed. They're already on recess. Are they even going to come back with enough time to be able to vote on it? The reality is it looks like it's not going to be voted on. And then at the same time, we have a negotiation on the debt ceiling. And at this point, the Republicans' argument is, look, you guys didn't keep up to your word on voting for the hard infrastructure package. Shut down the government. What do we care? We're not even doing anything. You guys aren't living up to what we agreed upon. So nothing's getting accomplished anyway. Now, my expectation isn't that anything's going to happen with the government. It wouldn't surprise me if outwardly Republicans are saying, we're going to shut down the government. And then behind closed doors, they're going to find a way at the last minute to get a deal done and it's going to move on. It's just the way it works in politics. But the Republicans are trying to use whatever bargaining chip they have. And maybe it does actually move the hard infrastructure bill forward a little bit faster because maybe the Democrats don't even want to have to deal with the headache of trying to negotiate another government shutdown. Again, we don't know, but we're setting up for the end of September to have potentially a lot of movement or none at all, so who knows?
And with all that uncertainty, and we know that the market dislikes uncertainty, and usually that's a downward force in the market, that may also explain a little bit why this week we saw a relatively down.
Moving on to CPI, we actually saw one of the best months that we've had, and month over month, we increased just 0.3%. Now annualized, that's 3.6%, still above what we were used to seeing at around 2%. But compared to what we have been seeing, really, really positive news. If we scroll down, we see the pattern of what we've been experiencing all the way. We had this rise earlier this year, a little bit of a pullback, then a new high in June. And then since then, we've seen this inflection down. Now, when this news first came out, the market loved it. We saw the market start to rise significantly on Tuesday, and then it started to sell off more dramatically into the close. Now, I thought that was pretty surprising. At first, I had the expectation maybe everyone's just still looking at that headline number, which is still 5.3%, which is scary. But then I started to think a little bit deeper. And one of my fears or worries is the problem that we're having a decrease in the inflation rate because of fears around the Delta variant. And if that's the case, if we think back to the original COVID pandemic, we saw inflation tank dramatically, and we almost had this gap that we had to reach up to. Partly why we saw February, March, April, those readings be so significant compared to the previous year. Now, if we think Delta is taking the same effect, and the only reason why we're seeing this drop off in inflation is because we're slowing down the economy, what that means is, what about a year from now, when we are comparing to these depressed levels, we're going to have another jump up in inflation compared to it. So you have these two arguments. The one side of, no, we've been waiting for this. We're just inflecting down because we're returning back to the norm of what inflation's supposed to be. We don't normally have 5.3% inflation. We were eventually going to come back down to 2%. This is just that path. Then you have the other side saying, no, this is way worse than we expected because we're seeing this depressed level because of the Delta variant. And now what's going to happen is we're pushing off inflation further down the road. So we're going to experience it longer and harder over the years. So you have these two theoretical ideas playing against one another. The reality is we won't really know the data until we get the next few readings. But considering how the market reacted to the positive news, I think that there is a lot of fear, uncertainty around inflation still, and that even though we might not be experiencing it this past month, we might not be out of the woods yet. As always, we appreciate you guys tuning in. We're here to support you. Your money's here to support you, and we'll see you again next week.